You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mikey Hu.
Hey, what's up, Market Moose? I know I'm late, but I told you I would be. Yesterday, I was at the game Canada versus Sweden, and seriously, if Team Canada would have played the same way throughout the entire game instead of thinking that at 2-0 it was 1, that would have ended up at 6-0 or something like that. It was amazing. Great game, great first period. They were everywhere, and then they kind of I don't know, take it smoothly. But the just to end on that note, the 3 versus 3 in overtime for 7 minutes. Wow, that was such a candy. I really enjoyed the experience. So anyways, that was amazing. I just can't wait to watch the rest of the tournament. Now, going back to more serious business, because we do have a few things to discuss, right? Telus just reported their latest quarterly earnings. So Q4, the end of the year, this morning. So of course, I'm late because I woke up late due to the game, but also because I had a good hour at least to do a deep dive this morning and to look at what happens over there. A lot of things to say, so maybe we're going to go above 10 minutes, but anyways. All right, so let's get started with the regular thing, which is revenue and earnings. So revenue up 3.5%. For the quarter, actually, pretty good, especially in an industry that we're having a very hard time to see good growth. Like most of the times, 1-2%. So 3.5, it's pretty decent actually. We have seen great performance for the wireless technology segment. The health services is actually also doing well, so up 10% for this one. Agriculture up 16%. So overall, the only thing that went bad in terms of revenue and earnings was really Telus Digital, that include Telus International. This one is still struggling big time. So it is definitely a burden at this point and not a growth vector. So hopefully it's going to come back. But at least I was happy to see that smaller divisions such as healthcare and agriculture is actually doing a little bit better. So growth double digits over there. So that's pretty much the purpose, right? In terms of earnings, the adjusted EPS was up 1 cent or 4.2%. So when you look at revenue earnings, I mean, it's okay. Not incredible, but I mean, it's doing for a mature business. I was quite satisfied, but this is not what I'm really looking at when I look into telcos. I've been telling you to look at cash from operation, at capital expenditure, at free cash flow. Those are the most important metrics. So the numbers for this quarter weren't that great, actually. So the operating cash flow was down by 18%. The free cash flow was down by 10%. And the capital expenditure was slightly up by 3%. So spending a little bit more than last year for the same quarter, but generating less free cash flow. I didn't like that. But then I put everything under perspective because cash flow metrics are more volatile depending on what's happening specifically in a quarter. So it's probably better to look at overall for the year. And for the year, the picture is actually pretty good. So for the full year of 2024, cash from operating activities is up by 7.7%. So up high single digit. That's great. Free cash flow actually up 12%. So definitely generating a lot more cash flow. And we're going to talk about the dividend in a second for sure. Because, I mean, one equals the other, right? But operating cash flow up 8%, free cash flow up 12%, and capital expenditure down by 6.6%. So spending a little bit less and generating more cash flow. That was the initial promise that all telcos made during the low interest rate environment that we got between 2009 all the way down to 2020. They said, we're going to spend massively, we're going to get into debt, but we're going to generate a lot more cash flow moving moving forward. So at least that happened in 2024. Now, two super important things to look at in those financial statements. And then if you're wondering like how I did that, I mean, I looked at the press release, and then I looked at the financial statement, and also the MDA, MND and financial statements also. So like the discussion about management and so on. So trying to dig a little bit more about their guidance and the dividend. So let's start with the guidance. I'm going to leave with the dividend at the end. I feel like I'm going to force you to listen to the full 10 minutes. So far, what we have is we have revenue and earnings that did well. The cash flow metrics a bit weak for the quarter, but strong for the full year. So that's the most important part, because we're looking for at least 12 months to see if there's a trend. We have a good trend there. The interest charges actually was almost the same. I can't find the numbers right now. Oh, it's like, yeah, it was up 3.5% for the quarter, up 11% for the year, but 3.5 shows that the debt is under control. The long-term debt is pretty much the same as well. So that's why it also helped, mostly because over the full year, the free cash flow has increased. So that enabled Telus to pay off their dividend. For the guidance, quite interesting in terms of guidance, actually. I was pleased to see those guidance. So revenue expected to grow 2 to 4%. So similar to this year. So that's all right. Free cash flow expected to be 2.15 billion. That would be a 8.6% increase versus last 2024. So almost 9% increase. That would be great. Keep in mind, last year at the same time, from the top of my head, the free cash flow expectation for 24 was about 2 billion, and they ended up 2 or 2.1, or anyways, it was it was over 2 billion, I'm sure. And they ended up with 1.98. So 1.98, not even 2 billion. So they're expecting what they expected last year, maybe. So take that 9% growth with a grain of salt, because they didn't made it in 24. So are they going to and the more I think about it, the more I think at first it was 2.3 and then it dropped to 2.1. So anyways, free cash flow probably going to be stable if you go from one year to another, but they still expect that it's going to be up high single digit. Capital expenditure expected to be around 2.5 billion, which is roughly a 2.5% drop. So pretty much spending about the same thing as they did in 2024. So they expect a little bit stronger cash flow generated by revenue, a little bit of operational efficiency, of course, because they laid off a lot of people over the past 2 years. They probably hope that Telus Health and Telus Agriculture is going to continue to generate a little bit more money. So overall, they are positive about 2025. Now, time to talk about the dividend, because I was looking everywhere. Of course, I was not expecting a dividend this quarter, because they're scheduled, if you look at the history, it's the next announcement of a dividend increase would be the next quarter, around March or something, March or in April. So that's all right for this one, but now it's time to see what could happen going forward. So in their MD statement, they talk about their target, and it's always been the same thing. It's 60 to 75% of cash flow, but the cash flow, the way they calculate it, so they kind of have this homemade calculation they provided. I'm not going to throw out all the numbers because you're listening to me, you're not seeing the numbers, but long story short, their target is between 60 to 75. They have kept similar calculation for several years. At the end of December, the payout ratio based on their calculation was 81%. So higher up than their target, but not completely crazy. Now, if you look at what happened with the free cash flow and the dividend payment, well, if they generate 2.15 billion in 2025 and they don't increase their cash flow, that would bring the dividend at roughly 75% based on their calculation. So they would bring it back to the target by achieving their guidance, so achieving their goals, and B, not increasing their dividend. And one thing I didn't like is found on page 3 of the management discussion and analysis, the MD&A statement, and it's under financing, debt, and dividend on page 3 of 117 pages, and it goes like this: there can be no assurance that our dividend growth program will be maintained through 2025 or renewed. They also mentioned that, of course, the more they pay dividend, the more it constrained their ability to invest in their operation to support future growth. So, of course, this kind of wording not probably telling us that it's going to be amazing, like great dividend increase. So on the one side, you can be super realistic, and the realistic me is telling, well, the story is simple. If they want to bring back the dividend on their 60 to 75% payout ratio, well, they need to not touch it and achieve their guidance, and then it's going to happen. So with this plus the wording, not a good sign. However, we all know that sometimes they don't make fully rational decisions, and then sometimes they will assess that if they increase their dividend by like 3% this year, it could be enough. So we're going to know more next quarter, but that is also going to determine if I hold on to my shares or not. At this stage, the thing I can say, though, is the dividend looks very safe, mostly because the guidance are positive. So the company expects growth, and the payout ratio right now is close to the target. So with close to the target and like positive guidance, I would expect that the worst case possible would be like stable dividend, so not touching it. I'm hoping for like a 3% increase, so maybe 1.5 right now, and then another 1.5 at the end of the year, because they used to increase it by like twice a year. If they increase it by 2% in the next quarter, I'm going to be super happy, mostly because it shows higher level of confidence from management. But this is where we stand at this point. So I'm not going to get my pom-poms and go poop pom-pom girl and then start cheerleading and jumping around and tell you that Telus is the best investment that you can ever made. But at this stage, I would say that I am a satisfied investor, but not super optimistic. So the jury is still not out. Maybe I'm going to end up selling my shares by the end of the year. The good thing, again, is always to have a well-diversified portfolio, right? So even if I'm not making that much money with Telus, I don't really have to mind that much because I have plenty of other great companies in my portfolio. Telus is part of it, but it's not going to have a material impact regardless if I sell it or not. Right now, I'm going to keep my shares and we'll see how it goes. All right, Moose, let me know what you think of Telus quarters, if you keep holding it or if you have sold. We're going to talk to each other on the YouTube channel, so Dividend Guy on YouTube. And yeah, so tomorrow it's going to be a shorter Moose on the Loose, but I thought this one was important. So we're going to talk again tomorrow morning. And until then, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to the Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.